Stephen, how do you view the most recent developments out of China? Is it something that the market will price in?
Well, good morning, Vani. They're certainly attempting to decipher just a number of different signals going on. You know, in the last 24 hours, we've had a trifecta of developments. The annual address by the Premier, the National People's Congress, and the failure to provide a growth target for the first time since 1994. Then the proposed a new national security law, which has a dramatic impact on Hong Kong's independence, autonomy, and role as a financial center. And then thirdly, the U.S. efforts to threaten to delist Chinese firms from their listing in U.S. security markets. You put them all together, and you've just got a confluence, a swirl of events which raise real questions about not only our relationship with China, but China's relationship with the rest of the world. And you know, the Hong Kong sell-off is just one indication of how disconcerting that is appearing to be.
Stephen, is there anything more sinister about this episode than about previous episodes? It got very heated, obviously, before the coronavirus pandemic, and then, you know, it calmed a little bit. Are you seeing something more sinister here?
Well, I don't know if sinister is the right word, but, you know, we're in a Cold War, so this is exactly the type of confrontational developments on both sides of the relationship that you would expect in a Cold War. I mean, I read with great interest the U.S. Latest statement on our relationship with China. The White House released a document on the 20th of May called the United States Strategic Approach to the People's Republic of China. And this is a Cold War manifesto by the Trump administration. And when you're in the midst of a Cold War, actions like China's new proposed national security law in Hong Kong, the delisting threats by the U.S. Senate, the U.S. administration's once again threats to Huawei, who's already on the entity list. These are the types of escalating frictions you would expect as the trade war has gone into a coronavirus war with all the allegations and threats that the Pompeo-Trump nexus has made toward putting the blame of the virus squarely on the Chinese authorities. So, you know, this is a very unfortunate escalating turn of events between these two, between our nation and China.
Stephen?
Yes.
Stephen, it's Guy in London. You talk about the fact that this was a trade war, it's then morphed into something else. My question is, does it now morph into a capital war? You talked about the restrictions maybe in terms of listings. There's also the issue of pension money not being funneled into China. The US has huge amounts of firepower at its disposal when it comes to capital markets. Do you see this becoming a capital war?
Well, I think, you know, that's already apparent right now. There is a an economic war in terms of trade flows, and there's a financial war in terms of access to our markets by companies in terms of listing and providing capital to China. The question that we need to address strategically is, what do we gain from this, and what type of behavioral change do we inflict on or expect out of China in response to this? And, you know, I think you can debate that. It's not clear what we gain from this. If China is able to transform its economy into more of a consumer services, technology-driven economy, don't investors and our companies want to participate in that? And this would rule that out. Do we really impose fundamental change on Chinese behavior by those actions? That's debatable.
Okay, let's talk about what this means at a more granular level. As you say, we're already maybe morphing towards a capital war. If you run JP Morgan, if you're Jamie Dimon, what does this mean for your business? If you run HSBC, what does this mean for your business? HSBC, huge sort of domicile in Hong Kong, huge exposure to Asia, huge exposure to China once that's become greater. And US banks as well are also looking to significantly expand their presence in China. And China over the last few weeks has tried to make that a little bit easier. Do I now put that on hold? Do I expect that not to now grow into the kind of business that I would have anticipated?
No, I don't think, again, I was in a position of being the chairman of Morgan Stanley Asia, and so we were, dealing with, these types of political pressures when I was there, although they've certainly intensified a lot. The focus of all of these multinational financial services firms, I think, is to just deepen their businesses domestically in China, working with Chinese companies in their own capital raising activities, looking over their shoulder certainly at pressures that may be coming out of Washington, and mindful of the risk that this might have on cross-border listings and on cross-border capital flows. But if anything, this is a time, I think, for all of these financial services firms to deepen their relationships inside of China and hope that reason will prevail at some point and allow the cross-border flows to work in a more orderly and predictable way.
Stephen, you write in Project Syndicate that the die is now cast, that this is already a ruptured relationship. Now, there's optimism later on, which we'll get to. But before we get to that, which is only a possibility, what are the tectonic shifts that you see for America and China as a result of this rupture?
Well, Vani, I've been studying this relationship for 25 years, and this is by far the worst state it's been in, and if anything, as we're seeing overnight and likely to see in the weeks and months ahead, it's going to get worse between now and November 3rd. This has become one of the top issues in the presidential campaign, and look no further than the Republican Party's own strategic election document, the so-called Corona Big Book, which was leaked on Politico a few weeks ago, and attack China is the main thread of the campaign. So there's no reasonable hope to repair this relationship between now and November 3rd, and we'll see where it goes afterwards. But we're embroiled in a good old-fashioned, tough, increasingly nasty Cold War right now.
Will the Chinese currency be used as a weapon, Stephen?
I doubt it. I think the renminbi, as I think you pointed out in the lead to this discussion we're having, is weakening in the offshore markets, but that's a normal reflection of what the news flow has been overnight, and that is not surprising. But I do not suspect, given China's emphasis on maintaining stability in its financial system, that it would weaponize the renminbi and use a sharp devaluation to boost its economy. It has other levers, and the Premier work report that was just delivered a few hours ago to the National People's Congress underscores the breadth of those levers.
Stephen, one thing that is very important, though, to China is its access to the global financial system. And it generally does that via Hong Kong, or it has done that up until now via Hong Kong. Are you surprised about the moves that are being made by the Chinese authorities with regards to this piece of security legislation that could be applied to Hong Kong and the setting up of the Chinese security services in Hong Kong? Is there a danger that the US responds on that and, for instance, the peg goes and maybe that Hong Kong as a financial center and a kind of funnel point for China to access the global financial system starts to degrade?
Look, it's a disappointing development. There's no way to really characterize it anything else. but step back a little bit from the the intensity of the moment and think about these increasingly destabilizing demonstrations that have been evident in the streets of Hong Kong over the past year or so. And if you know anything about China, China's about stability, not about instability. Hong Kong had become a major source of instability, and so I think, painful as it is to see this type of sort of imposition of law on the Hong Kong system from Beijing, it's not a shocking, as shocking a development as you might think for a regime that is really sort of steadfast and focusing on stability. And Hong Kong was not able, in its own domestic legislature and administration, to come up with a recipe for stability on its own accord, and certainly bumbled this extradition law as triggering the instability and has been unable to successfully resolve it.
But do you worry, with the November U.S. election fast approaching, that this will be taken as an excuse if we do see the situation in Hong Kong escalating? And from Beijing's point of view, you can see why they may want to impose this. Clearly, there is significant destabilization within the country as a result of COVID-19. But from a Washington perspective, there is also an election to be thought about. And I worry that maybe as a result, that DC sees this as an opportunity, or senators see this as an opportunity maybe to remove that special status that is currently in place.
Look, they may do it. I mean, there's, predicting the outcome of Washington right now is a fool's game, and there is fairly widespread bipartisan sentiment against China right now, and so this proposal that made its way through the Senate now has to go to the House, and we'll see if the president wants to sign it or not. We've seen nothing but belligerence and threats from the Congress and the Trump administration with respect to China since the trade war began in 2018. And the coronavirus has just been, another unfortunate escalation of accusations and largely unfounded conspiracy theories, which have intensified the animosity that many politicians feel with respect to China. And so I wouldn't rule out further escalation. And the question is, what will we get from that other than sort of the sense of satisfaction that we're tightening the screws on China? Will this damage the Chinese economy and the development of China? That's certainly something to debate. I doubt it, though.